Welcome to the June 19th, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and once a week this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. And for those that are new to our service, you can see that we keep our charts pretty clean. We have a few moving averages, and then we have a relative strength line, and then we have volume. And we really prefer to keep it simple. We look for price, patterns, reversals, really incorporate a lot of weekly and monthly charts into our analysis, which works really well when we're going through several hundred charts at night. And, we just can't have too much stuff to look at. So we keep our workspace simple. We have the daily, weekly, and the monthly. And we just want to make sure that whatever we're looking at on the daily makes sense on the weekly and monthly too. We want to see several time frames with a bullish look. All right, first up is the NASDAQ Composite, and we believe it had a constructive week of price action. There was a nasty sell-off late last week, and then a pretty sharp reversal on Monday, then a gap up, and a gap fill the same day, and then just 2 days of tight action. And so that pullback probably wiped out a ton of longs, and then there was a sharp move up, and now just 2 days sideways. So if the NASDAQ were to clear the 2-day high, that might catch many off guard here, especially those who thought we were due for a few weeks of chop, which could still very well be the case. The S&P is a bit weaker and has been the entire rally, and currently isn't an index that we're keying off of for our analysis. We're monitoring the distribution in the NASDAQ Composite. That being said, we really don't want the S&P to break down below the 250-day MAs and start to head lower. We're not looking for major indices to diverge that much, but we're fine if the S&P just shops around here and continues to underperform, as long as our growth stocks are outperforming, or if they're out of favor for a week or two, holding on to logical support levels, then we're fine with whatever happens in the S&P, short of a breakdown below the 50-day MA. All right, on to the model portfolio. Amazon, we're long after a 3-day pullback. There's a gap up. We bought the gap up. We were shaken out of an earlier position, but it looks pretty good and looks like it's going to continue to run higher. I think this uptrend line, along with the 10-day MA, should hold. Tesla, we're in from about 800 with a half position. We sold the first half on a 20% gain. Looking pretty good. Could set a new high with the next few days. Twilio, we're long from around this 200 area here. It's finally starting to move out. TTD, we're long from around this 320 area. Currently up a little bit over 20%. Well, I guess close to 25% now. Nothing to do there, just continue to hold. LVGO, we're in from around this 62.80 area, and we're up about 13%, looking good. And SHOP, we bought the pullback after the gap up. There was a gap up above resistance on a pickup in volume, so the next day we decided to put a buy limit order around 790, and we were luckily filled. It only went as low as 787.50, then reversed and now set a new high. This is more of a swing entry, so we're looking for maybe a 15-20% move. We're not looking to hold for 40 or 50 unless the price just stays above the 9-day MA the entire time. ZS, we are long from, I believe, right around 106. And it's had a great response to undercutting the 100 area. There was a gap down reversal on Tuesday, and then today's follow through was great on a pickup in volume, closing at a new high. Yeah, that's a new all-time high. So solid price action there. And we're still long FSLY with a very small position. We're up about 70% or so on the remaining shares. Before I get into actionable setups, I wanted to quickly go over just a few things I look for in stocks that are on my A list. And these are stocks I want to put a significant amount of my personal money into. And this is the way I approach it. Everyone has their own way of doing things. A-list stocks must have something going on. So these are my top names, fundamentally. Either there's earnings, sales, or future earnings. It has to have one of the three. And so last quarter earnings can be 20%, or last quarter earnings should be at least 20% or more. 40 to 50% is preferred. If you can find 100%, that's great. And if that's accompanied by revenues that are, 30, 40, 50% higher, that's amazing. And that's standard Can Slim approach. Bill O'Neill's looking for monster earnings and sales growth. However, through the years, I've noticed that if stocks do not have earnings, but do have impressive quarterly sales growth, that is fine as well. And we've seen this a lot in fairly recent IPOs, say stocks that are less than 5 years old. They may not have earnings, but they have incredible revenues growth. So those stocks, as long as the pattern's fine, we'll take those just as much as we take any stock with 40, 50, or 100% earnings growth. In some cases, if a stock doesn't have earnings or revenues, it may still be in play for us as long as the yearly estimates for next year are 25% or more. The higher the better there too. I believe you can scan for these parameters, or most of them, on finviz.com using their screener. And depending on your online broker, most of them now have some kind of screening software that have the ability to incorporate technicals and fundamentals. And one more thing to add to that, if you can, import these stocks in a watch list and sort this list by industry groups, as this would allow you to see where your setups are coming from, what industry groups are looking good. There's strength in numbers, so if you see a lot of software stocks looking good, software is probably going to go up. I didn't want to spend too much time on this. I don't want to turn this into a 20 or 30 minute long video. So if you have any questions regarding any of the fundamental stuff that I've covered here, shoot me an email at rick@morpheustrading.com, rick@morpheustrading.com. All right, on to actionable setups for the next few days. Zillow, here's the cup, and you have your little handle here. And I guess here's a second handle that's formed. This could be in play over this downtrend line, or if you want to wait for over the 3-day high. The biggest issue with Zillow is that it's yet to move to a new high, so it's a bit of a laggard. Etsy is above the downtrend line, but is yet to take off. Could do so over this 2-day high. Well, I guess Thursday's high. The issue here would be that there's no exit that's close by. I believe the 10 MA is around 81.50. And if we were to make that even say we make that a 9 EMA, it's a bit better at 82.82. So about a 5% stop. DXCM also possibly in play over the 2-day high with the 9 MA about 5% lower. AMD is interesting. I mean, I see it on my scans all the time, and I believe we've purchased this stock 2 times in the model portfolio, and clearly, it's tightened up quite a bit and had a false breakout and a pullback. If it can clear 56, it could be back in play. However, it is a pretty big laggard right now. Its relative strength line's been going lower while the Nasdaq's been climbing. So putting your money in AMD might be better off going into Nvidia, which has already moved out to new highs and is a leader and is chopping around in a pretty tight range here. So it could be in play for a swing above this 373 area with a something like a 6 or 7% stop. Facebook is interesting, reports 722. Looks like if it can get above this 3-bar high, you would think there's enough of a compression here over the past 3 days to launch it to new highs. We'll see, but that's potentially in play there. And of course, CHGG is looking pretty good as it recently cleared this downtrend line on a pickup in volume. TDOC is interesting. It cleared its downtrend line, but it stalled at resistance around 200. If it does pull back into the 9-day EMA, that would be one to watch for a pullback entry. And Wing, and pretty tight sideways consolidation. Stayed above the 50-day MA and undercut the 10-week MA on the weekly chart here. Broke its downtrend line on the daily and weekly. It was a false breakout though, pulled back in. So if it can hold around this 1950 to 121 area and turn back up, it could be in play. And the last setup that we're going to cover is SPLK. Pretty tight consolidation at the rising 20-day EMA. And this is a stock that's already broken out to new highs. Note the volume on the breakout was strong. Impressive really at, I guess, 3 to 4 times bigger than average. And the price has recently broken the downtrend line. And there's clear resistance around 188 or so. So a move through the 2-bar high on a pickup in volume would suggest higher prices in the short term. Okay, that's a wrap for tonight's video. Thank you for joining me. Have a great weekend, and we'll be back next Thursday night.